We've been gearing up for Aligned 17, which is a virtual conference dedicated to sales and marketing alignment. It's happening May 22nd through the 26th, and we wanted to do something special for B2B Growth listeners. Leading up to the event, we'll be giving you early access to some of the Aligned 17 sessions. Today's episode is exactly that. So if you like today's interview, head over to aligned17.com and sign up to access every session of the event. We've got an incredible lineup of speakers, including Gary Vaynerchuk, Jill Conrath, Tony Hughes, Tucker Max, and Trish Bertuzzi, along with dozens of other B2B sales and marketing experts. So go to aligned17.com and sign up today. You're listening to the B2B Growth Show, a podcast dedicated to helping B2B executives achieve explosive growth. Whether you're looking for techniques and strategies or tools and resources, you've come to the right place. I'm James Carberry.
And I'm Jonathan Green.
Let's get into the show. Welcome back to Aligned 17. We are here today with Sean Zinsmeister. He's the VP of Product Marketing at Infer. Sean, how you doing today, man?
I'm doing great, James. Good to talk to you again.
Good to talk to you again, man. So we're going to be talking about why product market fit builds go-to-market alignment today. But before we get into that, I'd love for you to explain to the folks, what is Infer all about?
Sure. So we do predictive sales and marketing. So we help build predictive models using our software for different companies to help them sort of target and focus on the best prospects. We use all sorts of good stuff between AI and predictive analytics that hit both the sales and marketing sort of side of the house. So we're sort of helping bridge that alignment. So it's a nice fit for this conversation today.
Definitely. So as we were talking offline, Sean, you mentioned that you think a good way to frame up this conversation would be to talk about what people actually mean when they say alignment. You said something along the lines of, we all talk about alignment because we want everybody to get along, but why does it actually make business sense? Talk to us about your thoughts on that.
Yeah, I think it's, alignment's become one of those buzzwords. And I think that it's because nobody wants to see sales and marketing in particular misaligned. Mm-hmm. I actually think that there's alignment that goes up and down the business. Like the other forgotten business units when we talk about alignment are finance, they're your CS teams, they're your product teams, they're your engineering teams. If sales is selling the dream and CS is inheriting the nightmare and your engineering teams are having to throw calories at these things, that's also creating misalignment. So it's really about how it's about efficiency metrics. How efficient is your business being? And part of that is can we get everybody on the same page, going towards the same goals so everybody benefits, right? So sales feels like there's money falling into their pockets. Marketing feels like they're, delivering the right prospects. Product feels like they're building the right products. CS is supporting good customers when they can. That harmony that I think people are really after. And the truth is it hits all different sections of the business.
No, that makes perfect sense. I don't hear anybody talking about alignment anywhere else but sales and marketing, but it makes perfect sense that we need to be thinking about that as well. You also mentioned when we were talking offline, Sean, this evolution of alignment. Can you talk to us about this?
Yeah. I think that where people tend to see alignment today is that, revenue is the only metric that matters. And revenue is insanely important. That's the lifeblood of what a lot of businesses run on. But the problem is that if you're strictly going after revenue, you really only have one person in charge, and that's your sales team. And what's really interesting in terms of where we're seeing, if you look at the funnel today, you have sort of sales is creeping up the funnel as they're gaining more control over things like automation, right? There's sales acceleration tools is what they're called, those different types of things where they almost have little mini marketing automation systems at their disposal. Marketing, doesn't need to be in charge of the communications. Marketing actually has less, control over the types of communications that sales is sending out. And marketing, with things like account-based strategies, becoming more popular, marketing is sort of trying to take on more of a sales role. And so it's really interesting to see the different technologies that we're starting to equip our go-to-market professionals with, which is almost sort of causing alignment to evolve a little bit as both a problem and a solution.
Okay. So this next piece is where we're going to spend quite a bit of time on. We're going to be talking about segmentation and market planning. If we've evolved to this place where it's both, alignment, it's a problem and a solution. Talk to us about how that kind of segues into segmentation as kind of the forgotten hero, and then we'll talk about market planning as well.
Yeah, I mean, I think that segmentation is like, it's an insanely unsexy topic, right? I mean, it just feels like, business school 101 type stuff. But if people are actually trying to figure out how do I actually build alignment in my organization across all business units, it really has to start with your segmentation. And that is like, we sell a product today. And who is this product best fit for? And I think the easiest way to start to think about things is, if you're taking a verticalized approach. So a lot of businesses, especially for startups, when they start out, it's very, very popular to attack the mid-market first, right? Because mid-market offers sort of middle-of-the-road everything, middle-of-the-road ACVs, middle-of-the-road churn rates. It's a great place to learn, too, because mid-market companies can move a lot faster. There's not necessarily the challenges of scale that some of the down-market plays sort of arrive at. And so a lot of companies start with the mid-market. The problem is that mid-market tends to be no man's land, which is like once you feel like you've saturated a market, most companies are either at a crossroads where they either have to go upmarket and attack the enterprise. This is exactly the reason you're seeing account-based strategies come into play and be popularized, because they're like, where are we going to expand revenue? Let's attack the enterprise. These are new strategies, et cetera. Or do they go down market? And the truth is that you have to sort of think about a couple of things. One, does our product support that strategy? Your product might be learning, iterating, fitting from a both messaging and a technological point of view from a mid-market standpoint, but can it scale to the SMB? Could you make it a no-touch type product, for example, that offers a free trial where we can scale to millions of users? That's a popular down-market strategy. Does it support up-market? Do we have the right people and support mechanisms in place? What type of technological challenges do we need to overcome for the enterprise? Because if you look at it systematically, I'll say this again, sales sells the dream and CS, customer success, inherits the nightmare. Like the problem is that like if your sales guys are out there, there's always going to be salesmanship that is involved in the process. But the truth is you're going to create pain points and misalignments all throughout the business unit chain, where CS now is inheriting accounts where they're like, Jesus, we can't, we're going to have to expend a lot of energy to do this. It's very popular with B2B too, because what ends up happening, James, is that a lot of B2B companies end up spending a lot of time on custom work, where it's like, hey, this contract is X amount of value, but in order to win this contract, sales promised a whole bunch of stuff that is actually not really out of the box for us, so we have to expend. And then what do you have to do? You have to bring engineering time in, which is very expensive as well. Okay. And the whole thing just sort of cascades. And like that's really where it's like, it's not even the fact that like, what are the good prospects? Sure. What are the good prospects that marketing's bringing in? Mm-hmm. But at that point, it's like, you got to look at your product and also like the market segment that you're attacking to. If you're starting in the mid-market, which you don't have to start the mid-market, but like if you're starting in one of these market segments, does your product actually support this strategy? And then once you feel like you've reached a point of saturation, looking at your product to understand, will it support these other verticals? What are the other challenges? And then human capital support mechanisms that I have to have in place.
Got it. So is CS inheriting the nightmare, if you will, because sales is kind of siloed themselves to say, hey, we're going to go up market or we're going to try to play down market without first making sure that the product is ready for that CS is ready to support that. Is that what you're getting at there?
Well, it's interesting. The problem is not actually, it's funny because we're not talking about like nefarious salespeople like that. It's not that. It's actually that the salespeople are actually doing the job that we hired them to do. They're chasing revenue. And so if your salespeople are incentivized by revenue, which all salespeople are, their job is going to be to chase that revenue, by hook or by crook. They're going to try to get it as much as they can, because in order for them to get paid and also for them to hit the number, there's a lot of pressure from sales leadership to chase after that. That means that they don't have the power to fire bad accounts, right? Like they can't sit there and say, I got to push this thing across the line because it's close enough, even though there are all these little scars here. And that's the reason it is. Like the alignment is all off. Like you're not actually empowering people to make those decisions because they're chasing revenue. And part of that is like, well, how efficient are all of your salespeople being? A lot of times like these companies build these big giant sales teams and the problem is like if you have more salespeople, that means there's going to be less accounts to go around, depending on the type of market you're in. And so like, the quality of the accounts that you're closing and bringing in are going to be less and less and less, which then attributes to, when you're looking at your average contract values. Like, how is that playing into? And there's a pricing mechanism that has to be addressed there too.
Got it. Okay. So you mentioning pricing right there, that actually segues us into the next part of this conversation that we're going to take it to, which is kind of how does pricing fit into kind of this go-to-market alignment? What are your thoughts there, Sean?
Yeah, I mean, we're touching all of the product marketing hot button issues there. Segmentation, we're talking pricing. Pricing, I'm going to tell you this. So my trigger warning here is that this is a gross oversimplification of, pricing is a science. And there are books a lot written by people who are a lot smarter than I am on this subject. But I do think at a really high level, the way that it relates to alignment is looking at a couple of things. Pricing is a really important tool for alignment because you should be looking at in your organization, what is the correlation between ACV, my average selling price, or ASP, whatever you call it in your organization, and your churn rate. Because at some point in your business maturity, you have to be looking at it to say, hey, if I'm selling, I'm going to make up numbers. If I'm selling contracts that are south of 70K, as an example, but my churn rate is really high, this means that these accounts are not great. Are we pulling in revenue? I mean, yes, and we're going to try to gobble up as much of these accounts because that's the number that our salespeople are employed to hit, right? That's their job that we're paying them to do.
Yeah.
That's why they can't be picky with the accounts. But you are going to get to a point where you're sitting there being like, we can't keep taking these things in because as we are gaining revenue, we're losing it out the back end as well. And so just being able to understand that correlation and that pricing mechanism to be able to empower salespeople with to say, hey, you're not going to sell contracts that are south of 70K. Everything's got to be over 70K. That's so empowering to a salesperson because now the pricing negotiation is out the door. They now have the ability to walk away from a deal and pick their accounts. Now, not every business can actually have the luxury of trying to make those decisions. That's why this is stuff you have to think about really early on in your business before you go hiring tons and tons of salespeople to go chase accounts. Because if you think about it, what's better alignment than to have a salesperson say, hey, we now know that if we sell above this average selling price, that the churn rate is going to be really low. CS loves that. That means product's going to love that because they're going to say, great, that means we're pulling good accounts in. Marketing now has a better and more structured, more focused view of saying, okay, we know we need to have these types of accounts. And like I said, it gives sales the ability to fire accounts, right? Like being able to walk away from a bad account. It's funny, we never talk about that in business. Like everybody just wants to, it's net new, it's leads, it's prospects. I mean, these are addictive qualities.
Yeah.
But the thing is that if you take on bad accounts, they can really, really harm your business. It's great that you close that $1 million deal, but not if you have to have 3 people constantly dedicated to it. Because those 3 people, if those are 3 people that are each getting paid, 6-figure salaries, total cost of employment, that's a super expensive account. Yeah. You're going to get burned on that super, super quickly.
Yeah.
And so this is where even being able to understand it, take a look at doing it's like back of the napkin analysis, right? To think about, hey, if we're selling these ACVs, what is the correlation to churn rate? And by the way, going back to our segmentation strategy, well, hey, if I have these smaller mid-market accounts sort of falling out the bottom with high churn rate, can I replace them with higher sort of enterprise accounts too that are sort of less churn, higher ACVs? And by the way, we just defined why the account-based strategies in general are becoming more popular is because they want to sort of say, if I could take these bigger accounts and replace them with the stuff that's falling out the bottom, then that's a healthier business, and that's going to scale a lot more appropriate.
That makes a lot of sense. So we've touched on a lot of things here. Is there anything else that you feel like needs to be talked about before I let you go today?
I think it's just these are the things where people, this is it's a Steve Jobs concept of zooming out. And I don't think that we do it enough in business to sort of look at, everybody talks about shiny object syndrome, and we try to follow on the same hype, but we don't really do a good job of digging into why these things are happening for our business. Yeah. And part of it is to me to stress efficiency metrics. Like companies need to look at things like burn rate. They need to look at things like churn rate. They need to look at things like quick ratio, and you can look up what some of those stuff are in Google to understand, is my business being healthy? Are we being as efficient? I can't tell you the amount of times that, especially when we're talking about how we can leverage things like AI and predictive to say, oh, well, hey, I have, 20 SDRs. And I'm like, are you sure that they're the most efficient that they could possibly be? Like, maybe you can trim that down and really, really build a healthy business. Trimming down the number of sales heads that's not necessary. It's not like being in favor of laying people off, but it's like saying, like, are we doing justice to the business? What is our burn rate? Could we actually be scaling in a much smarter, healthier way, and then organically add those heads once our strategy is secure, once we really feel like that product has a fit? These are tough things that are not very sexy issues. Yeah. It's not like you can just sort of slap a piece of technology on it. It requires you to sort of look at your business. And when we talk about like strategy, this is the really, really good stuff. This is the strategy that businesses have to think about, because no tech is going to help you solve it. Like, it's just not. It's going to be the stuff that you have to get around the boardroom and think about, and then use technology to sort of empower it, regardless of what it is.
Got it. Okay. I love it. Well, Sean, this has been really insightful for me, and I'm sure a lot of, the people would agree. If there's somebody wants to connect with you, maybe dig deeper on some of this stuff around, efficiency metrics and things like that, what's the best way for them to connect with you? And then what's the best way for them to learn more about Infer as well?
Yeah, for sure. I'm pretty easy to find these days. You can just Google Sean Zinsmeister, hit me up on any of the usual channels. At S. Zinsmeister on Twitter, Sean Zinsmeister on LinkedIn. Those are all great ways to get a hold of me. You can even shoot me an email, sean@infer.com. If you want to hear what's going on in the latest of predictive and AI, head over to www.infer.com. Infer.com/blog is where you can find a lot of my latest articles, and all the good stuff is over there. You guys also have a podcast as well, Sean, right? Yes, thank you for reminding me. If anybody who's interested in sort of go-to-market technology, we've been doing a lot of what I call pop-up specials these days too. So head over to stackandflow.io. We talk a lot about AI, the future of automation. If you're into really geeking out about data, sales and marketing technology, as well as we're sort of starting to broaden a little bit, we had Dr. Massimo Mazzotti of Berkeley talking about the history of algorithms recently. So expect more of those types of shows from us. So you can find us on iTunes, Stack and Flow, as well as stackandflow.io. So definitely check us out over there. We'd love to hear what you think. I've been listening, and I've been loving it, Sean. So you'll definitely check out Stack and Flow. Sean, thank you so much for your time today, man. This has been incredibly helpful for me. I know it's going to help a lot of people, so I appreciate it. Awesome. Thanks for having me, James. If you're a B2B marketer, we want to feature you on sites like the Huffington Post, Social Media Examiner, and Chief Marketer. Every week, we send out a question related to B2B marketing. We use the responses to those questions to fuel the content we write for really popular websites. So head over to sweetfishmedia.com/questions and sign up today. Thank you so much for listening. Until next time.